I'd like to share important updates with you in the NDIS property space. Updates you would want to be aware of when considering investing in an SDA property under the NDIS.
Good day, my name is Stephen Lazar from properT Network. Thank you for stopping by today. Hey, so that you understand who I am and how my clients benefit from working with me, I thought I'd share some of my background with you. For the past 16 years, I've been successfully helping my clients gain control of their own financial destinies by helping them secure what we call and refer to as investment grade properties. I have also always owned and invested property myself, so I understand the power of how to use property to accelerate my own financial planning goals and thus yours. Prior to that, I was a financial planner of 15 years, and I gave it away as the industry products just did not suit my client's profile and would not give them the financial freedom that they needed.
Let the buyer beware. The current situation is that banks who lend for NDIS have changed lending policy to principal plus interest, so please be mindful when doing your numbers. Due to the popularity of NDIS property, there's a plethora of sales and marketing companies who have come to market of late just trying to flog you something. Most of what we are seeing out there are in locations with very little to low demand, so you'd want to do your research thoroughly. They're also creating competition for you by selling to other clients in these same areas. Not very ethical, you would agree. And yields have dropped as a percentage of the property value on the back of land price increase and build price increases, meaning these marketing companies are either going to where land is cheap and there's a lack of population and participants and carers, or they're offering bare bone minimum build quality at your expense, or it's a combination of both, so that your yield on paper looks attractive, and I will reiterate, on paper. NDIS property updates. This is vital information because the landscape has already changed. It changed when property land prices increased, when build prices increased, or because developers are cutting lots so small that they've become unsuited to SDA purposes. Yields are not what they were, yet they're still very healthy, making investment grade NDIS property a fantastic investment vehicle when you get it right.
We started introducing our clients to SDA, or NDIS Property as most call it, about 2 years ago now. And at that time there were very few groups offering SDAs. Now that the popularity has and the interest has grown, there's a plethora of sales companies out there coming to market. And these sales groups have little to no prior experience in SDA property, which in its own right is a complex investment. And they're happy to slap anything together so long as the yields on paper look great to you. They offer little care and often little to no responsibility.
When an NDIS investment looks excellent on paper, you've got to be aware that these marketing companies are offering you packages designed to look enticing in their presentations. However, on review, when you know what to look for, you will find that these packages tend to include risk, which we will elaborate on for you through the presentation, because it is important that you're made aware of the current situation. So many sales companies are offering crazy, untenable yields on paper. The NDIS landscape has definitely changed. So questions that you'd want to be asking include, where should I build and where is the demand? Which disability category should I build for and how many participants should I build to accommodate? What should my investment budget be? How do the numbers work? And what would my cash flow look like? Who will manage the property and get me tenants? What are their fees and how long is their head lease agreement? What is a genuine, realistic yield that I should be expecting? In the SDA property market today, you need to be aware of what the costs of land are where you want to invest or where you should be investing. What is the cost to build, and are there builders available for you? And what yield as a percentage should I be comfortable achieving? A sound investment vehicle is achieved when you match up the requirements to your budget and the purpose for your investment, devoid of emotion. Then you're on your way to taking control of some of your own financial planning destiny more efficiently. Keep in mind, participants are just as human as you and I are, except they have disability. Remember, the purpose of the NDIS is to build fit for purpose, giving the participants choice of where and what to live in so that they may thrive. Yet, the majority of packages we review for clients like you are located far out of required infrastructure or the participants' communities that they are familiar with. Again, these outlying areas that have little to no infrastructure or benefits to allow a participant to thrive, which remains the primary purpose of the NDIS program. Prospective clients keep reaching out to us to ask us if a package they are being sold is suitable and want to know if they should commit to it. Just this week, a client sent us several offerings from 2 sales groups who happen to be offering similar packages. On review, the sales companies want this client to invest close to $800,000 in a rural village or town of only 13,000 residents and very few NDIS participants across all the categories that live there. Yet, this company is wanting to sell them a 3-participant plus carer house, demonstrating a very high yield on their colorful brochures, and sadly, to their own greed, locking in their investors into listen to this, into a 20-year lease agreement. Oh my goodness. A 20-year head lease agreement? That is not in the investor's favor at all. Hey, I also wonder how many other SDAs are they prepared to sell to unsuspecting clients in the very same location? This is robbery. Let's go back to the purpose of the SDA program under the NDIS, which clearly states that participants must now have choice of where they want to live, and secondly, the participant must be given the opportunity to thrive within their own communities. If you're comfortable with that, let's move forward. There's a market gap because there's an insufficient supply of compliant SDA housing. Participants are still living in unsuited accommodations and are looking for new build SDAs. Participants' choice of dwelling. If you build a home on a generous floor plan, this becomes their forever home for your own participants. Participant choice of location. When you build in a location in which your participants can thrive, they will stay longer. Usability. Build to suit the purpose of the NDIS, the participants' needs, their family requirements, and their carer requirements. This way, you'll attract participants a lot quicker and hold on to them for a lot longer. When it comes to sales companies selling SDAs, as consultants in this complex space, clients share with us packages these sales and marketing companies are wanting them to buy, asking us for our advice and our feedback. And what we find is that over 80% of what is being sold out there today to people like you is appealing to your greed only. Please be mindful, because very few present as investment grade worthy of your investment dollars. Let's take a look at an actual sales company's offer. Would you be keen to invest in something like this? If the property were $760,000 and projected yield is $145,536 per annum, that's a whopping 19% on paper. Man, I certainly would on paper. The numbers I shared with you in the previous slide actually came from a package being marketed here. And as shared previously, we are consultants in this complex space, and clients share with us packages like these 2 examples I'm going to go through for you now. And on our research, we still cannot work out why any investor would invest so much money in locations that are very unsuited to SDAs, but some people are buying them. In this example, The town of Goolwa is a far 83 kilometers from Adelaide, with very few to no participants, and the house that they are being sold to is a 3-participant HPS home with a carer. In the whole of Goolwa, there are only 8,808 residents and very few NDIS services and carers. And if you look at the table on the left, you will notice the limited amount of NDIS services currently being provided. And when you break down those numbers and you look at the high physical support participant, there are even less participants who require and need HPS homes in the whole of Goolwa. How many SDA homes are marketed by companies selling into this area with very limited SDA requirements? This is the question we ask. And again, as an investor, why would you invest out here? Right now, an issue being experienced in a large regional city just like Cairns, who has around 158,000 residents, is the lack of SIL carers. This is an area with a strong population, yet they're struggling to get carers to look after your SDA participants, whom you need to attract if you invest in a place like Cairns. No SIL carers means no SDA participants who require carers, which in turn increases your risk of vacancies. This is important information, and hoping it sinks in and makes a profound impact for you when doing your own due diligence. Because as we speak, there are many other SDAs being sold in many similar isolated locations and communities by these sales companies to unsuspecting investors just like you. So ask yourself, if one goes to a very isolated location, such as Goolwa in this example, what is the opportunity of having a strong supply of the much needed SDA carers in these isolated communities? Experience tells us very little opportunity. The green area that you see at the bottom of the map encompasses the postcode 5214, is a massive 276 square kilometers with a small population of only 8,800 residents and fewer than 300 NDI services. As per the SDA, if 6% of these services are for SDA participants, then that means that less than only 18 participants spread across all SDA categories over this large 276 square kilometers equates to very few participants who are also spread out over a large geographic area. Does this frighten you as it does scare me? If yes, then we're on the same page. Now that you've had an increased understanding of how this works, do you think locations like Goolwa or similar anywhere across Australia make for a risk mitigated investment for you? Or do they add a strong element of increased risk to you and your investment? Why? Why, when you have choice, would anyone take a chance and risk their investment dollars and do this to themselves? We continue to ask. From the same two companies we spoke about earlier, this is one of them who's marketing in, as they call it, Perth. Yet this is 87 kilometers outside of Perth itself, in a very, very small suburb called Dawesville. Again, just because you can build it and because it's cheap, it doesn't mean you should be building it. If you look at the total NDI services on the table on the right, there's less than 170 NDI services across the whole of Dawesville, split into the different categories. There's 10 to 14 people with disability caused by injury, and if you're selling at high physical support houses in this area, it doesn't mean they're going to come. Yes, Mandurah, just north of it, makes sense, and Mandurah is a big place, and there are a lot of NDIs being sold into Mandurah, someone is not going to travel all the way out to Dawesville to look after participants when they can look after them in Mandurah. And someone in Dawesville is going to be so isolated from their community, from infrastructure they need in order to thrive and live. It just does not make sense for a marketing company to sell in these areas unless they're looking to coin a profit out of your investment dollars themselves. Please be mindful when investing in SDA property. Send us something before you commit to it and let us look at it for you. Key issues. Just because one can build it, it does not mean it fits the purpose for the NDIS or the participants, their families, and their carers, no matter how the sales companies spin the investment opportunity to you. To be fair, I'm unsure if they're offering these products to investors out of their own ignorance or greed, just to flog another innocent victim a property that will earn the sales company good dollars at you, the investor's own expense. Please be mindful. There are ways to validate whether their offer to you is of benefit to you or to them. Reach out and ask consultants just like us before you innocently put pen to paper. What are the risks and rewards of investing in NDIS property? Let's look at some of the risks. Too far out of a regional center or town, on a cheaper build, where projected yields on paper look excellent, and where there are long head lease agreements in place, when the sales company's greed is ahead of your needs, and lastly, where your greed is ahead of the purpose of the investment. If we look at the other side of the table and we're looking for what are the rewards of investing in NDIS property, when you build fit for purpose in a location with demand and low supply, on a generous floor plan, in locations in which your participants can thrive, which is the purpose of the NDIS, and where you build to attract participants quicker and hold on to them for longer. When you look at all the rewards, your return on investment will increase, especially when you avoid the risks. Before you build your SDA, you may want to have an SDA consultant review your floor plan and offer their feedback as to whether it will suit the participant category you're building for. This could save you significant dollars proceeding with a build that may not attract participants. You'd agree? What is the cost of doing business when investing in SDA property? So we continue to see low entry specs and finishes because it is very easy to build at bare bone minimum requirements just to achieve a lower package price so that your yield looks great on paper. But for an investor who knows what's going on, you deliberately want to avoid that. When it comes to the land, the only way to get cheap land is to buy further out or in the wrong location, or buy a small block of land where both strategies are unsuited. When it comes to the build, the only way to offer a cheaper build price is to build at bare bone minimum standards or a small and unsuited floor plan where the cost per square meter to build is pretty much industry standard across the NDIS. On review, we will reiterate some points as well as give you further information on all things you'd want to know about SDA property investment.
Think about your participant when making your investment decision, because that is who this incredible program is all about. The NDIS want you as an investor to put your hand up to build a fit for purpose home, which includes above minimum specs on a generous floor plan and in a location in which your participant can live in and amongst their communities and thrive in. Their families do not want their family members with disability living in an SDA home 20 or 30 minutes away from where they live. And if it's a regional town, 20 or 30 minutes outside the CBD is very far. Regionally, everything is a 5-minute drive for locals. So 15 or 20 minutes becomes just too far. Are you aware that care workers who take care of your participants charge the participant for travel time. So if they have to drive 20 or 30 minutes to collect a participant and then drive another 20 or 30 minutes back into town for an appointment and then take the person back home again, they will bill for an hour and a half of their time. And that comes out of the participant's package. The participants' pension packages are not big, and participants do not want to spend that money unnecessarily, but will have to if they are located that far out. When the home is available and built, and the participant and their family drive out to the property to inspect it with their carer, they will say, no, it is better to rather stay centrally where I am, even if the current accommodations are unsuited, than to be stuck that far out, isolated from their communities and their friends. So what makes you think that they'll choose that location that you have built in? Think about it before you build. Does this make sense to you? Can you now identify the looming issues in the space? Now, the other area you want to be highly mindful of is that carers do not want their participants to be geographically spread, because this results in a lot of wasted time and driving time for them getting around to all their different clients. Why would a carer now want to drive another 15 minutes further out just because you built your SDA that far out of the CBD? Understanding this, can you now identify with the importance of location? For carers, it is more efficient and easier for them when their participants are all within a geographic location of each other. So when a carer and the family members take the participant to review your NDIS property that you built further out to see if it's a potential fit for the participant, they need to like the location and the floor plan. Otherwise they'll turn around and walk out, and you will not have a participant in place. Or adversely, you might get a participant, but you'll experience a higher turnover of participants, as yours will leave as soon as something closer in or on a better floor plan that of a generous size becomes available for the participant. They will move. Family members, carers and participants do have choice of where the participant will live. And it is logic that a generous floor plan in a suited location makes for an ideal investment for you and also a home for them. My fear for you is that in order for these sales companies to keep offering these high yields that are attractive, to demonstrate that much potential income on paper, they have to come in at a lower package price. And the only way to do so, the only way to achieve this, is to offer you a cheaper block of land or a cheaper build, or both. Just because you can build it, it does not mean they will come. Did you know, as an investor, you too, as an investor, have choice. You can either follow the purpose of the NDIS and build fit for purpose, or you can follow your emotion of greed, attracted to these high yields being spruiked. Because history proves that a decision made out of greed or fear of missing out is financially detrimental. It is a financially detrimental investment decision which results in a significant amount of lost dollars to you over the life of the investment. So what will your decision be? We know the yields that are offered on paper are unrealistic. And if you can secure a cheaper package on a high yield further out, it sure does look great. We know this. But hey, we're all adults here. But it's your money, and you do have choice of how you want to deploy it. If it's my money or my client's money, I know exactly where I'll be or what I'd be recommending. Knowing what I know about property and all things NDIS, I know what to recommend. I have 16 years experience in this property space and 15 years financial planning experience before that. I've always owned and invested in property, and I understand how this investment works. And so I shifted my focus to consulting with my clients using property as their preferred investment vehicle, helping them astutely invest in investment grade properties. And I share this experience with you so you understand where this information comes from. And with NDIS Property, just like other investment property, very few SDA properties are investment grade and worthy of your investment dollars. The question is, how do you identify which are worthy of your attention and which you want to avoid? A lot of my clients have successfully built portfolios over time and are now taking SDA Property as their preferred investment vehicle for cash flow. And we added SDA Property to our product range 2 years ago when the interest shifted from corporate and super fund industry to private investors just like yourself. And what this means to you is that I have a lot of experience in property and have a lot of experience in numbers which drive and underpin your investment and how these investment vehicles work. The NDIS minister himself raised concern in that very few in this NDI space are purposely building properties that are suited to the NDIS, the participant, the carers, and their families. Hey, they may be compliant, but are they practical and will they attract participants? We don't think so. Over 80% of what we see being sold out there is packaged to appeal to investors' greed. But when you set the emotion of greed aside and you know what to look for in NDIS investment, you too will be able to identify what you want to avoid and what you want as your preferred investment. The participant under the SDA program should always come first in a dwelling purpose-built to suit the participant in a location in which they can thrive. These same sales companies have identified the potential income they can earn by appealing to your greed as an investor. And tragically, we see it happening all the time. So ask someone who you can trust and who's well versed and educated in all things NDIS. So why invest in an NDIS property, you may still be asking. Rightfully so. NDIS property can be complex, but it is also an excellent investment vehicle so long as you get it correct from the outset when you adopt a mindset of building fit for purpose, because this is our mindset and has been our mindset from day one in offering it to our clients. We will only build a property that suits a participant in a specific location. We place the participant, their family, and their carers first in everything we do, in location and floor plan. And this way, you will attract the participants a lot sooner and you'll hold on to them a lot longer, plus ensuring that your investment is sound and astute. This is Stephen Lazar from properT Network signing off, and we hope you get maximum benefit out of this message, because that is the intention of our update we're sharing with you, which in summary is to bring to your attention that you must be exceptionally mindful of the location, the floor plan, and the sales and marketing efforts of these groups. We love questions, and we invite your questions so that you can come to an informed investment decision in finding yourself an investment grade SDA property. We also offer that you send us packages that you're getting for our review, for our feedback and questions we want you to ask these SDA companies that are offering to you. SDA property is unsuited to most investors that we talk to. And if it's not SDA, perhaps a SIL home, a co-investment, or a house and land or a duplex might be more suited to what you're looking for. So whatever it is that you're looking for in property, share your requirements with us and we will match an ideally suited, best fit investment vehicle to your goals, to your budget, to your purpose for the investment, so that it is a property that ticks your investment goals for you and helps you accelerate your own financial planning strategy for the purpose of you taking improved control of your own financial destiny. So once again, Stephen Lazar, Signing off. Have a beautiful day.